Hello and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. It's a good Friday. In fact, happy Friday morning, given the fact that we saw a strong close to the May series. You know, the adage that sell in May and go away hasn't worked this time around. And of course, there's good news for cricket fans as well, especially for RCB fans, because RCB has managed to storm into the finals. It would be extremely special this time around, given the fact that Virat Kohli has recently announced his test retirement. So that makes it even more special. And remember, RCB has never won the IPL trophy. So it will be a maiden for RCB if it manages to win this tournament. Of course, very special for Virat Kohli fans at least. One more to go, as they say. And that's when fans will actually go out and celebrate. But of course, showing his mettle, Virat Kohli. Yesterday, of course, it was just about a 12-run, with 12 runs with the bat. But no doubts as to how RCB fans will be cheering the fact that if RCB really wins this cup, it will be a maiden one and a more special one for the fans of Virat Kohli, so to say. But in terms of the market cues then are not looking all that encouraging this morning, thanks to the US appeals court decision to reinstate Trump's tariffs temporarily, which is why we are seeing US futures trending lower and Asian markets have also opened lower. The GIFT Nifty is extremely flat at the juncture. So let's see how we really kick off the June series. Lots of stocks in focus, including the likes of Bajaj Auto. Numbers have come out. We'll take stock of that. Your stock-related queries will also be in focus. So stay tuned and keep your stock-related queries coming in on our live feed as well. But before we move any further, let's quickly take a look at the top headlines at this hour. US futures slip after an appeals court temporarily reinstates Trump's reciprocal tariffs. Wall Street ended in the green last night but was well off its session highs. Asian markets are subdued amid uncertainties surrounding tariffs. The Nikkei is down over 1.5%, while the GIFT Nifty is signalling a flat start for the Indian market. Oil prices slip over 1%, retreating from earlier gains, while gold prices rise above $3,300 amid softer jobs data. Two-wheeler maker Bajaj Auto's fourth quarter results beat expectations with margin above the 20% mark for the sixth straight quarter. The company has also announced a final dividend of 210 rupees per share. And GDP data for the fourth quarter and for the full year FY25 will be released today according to the Moneycontrol poll. The Q4 growth is likely to come in at a four-quarter high of 6.9%, and for the full year, it is likely to be at 6.3%. All right, then looking at the cues for trade, we managed to end above that 24,800 mark thanks to late buying, fag end buying. Last 40 minutes we saw a lot of action, and we recovered pretty smartly from the day's low. We've ended the May series with gains of over 2%. Last 2-3 series have been really good for the market. In the April series as well, we saw 3% gain for the benchmark indices. Mid caps continue to outperform. The market breadth was extremely good yesterday. It was at 1:1, evenly balanced. There was strength when it comes to the breadth as well. India VIX cooled over 8%. It is at a 1-month low. So that could be some bit of comfort for the bulls. Metals, IT and realty, these were among the top sectoral gainers yesterday. The Nifty Bank index also recovered over 700 points from the day's low. FMCG and PSU banks rather, these were two of the sectoral indices that didn't do all that well. FIs continue to be net buyers, for a fourth straight session, so to say. 884 crore rupees worth of stocks bought in the cash market. Domestic institutional investors also bought stocks worth 4,200 crore rupees in the cash market. Put call ratio rose to 0.86 vis-a-vis 0.76 in the previous session. No stocks in the F&O band today. On that note, let me bring on board our technical guest for today. Joining me is Raja Venkatraman, co-founder NeoTrader. Raja, lovely to have you on the show. Good Friday morning. We had a good end to the May series. Before we delve into the levels to watch out for today, I want to get in your thoughts on what you think about RCB storming into the finals. Are you supporting RCB? If you are, you will be, a happy man this morning.
Yeah, definitely. RCB is the team to watch out for. They have been the underdogs for so many years, right? And ever since the debut of Virat in 2008, right? Slowly and steadily he grew in stature, but his team did not win. So this will be a good ending, just like how Messi ended on a swan song, and all the RCB fans are waiting for the Virat Kohli to lift the cup, and it will be a great moment. So let's see and wait and watch for Tuesday, which is the finals, and let's see how it goes. But then it looks like RCB is definitely on steroids.
Sure, RCB is on steroids and they have shown good performance throughout the series this time around. And of course, just one more to go, so to say. But let's talk about the Nifty levels as well. 24,800 is back on the charts. We did reclaim 25,000 briefly during the week. But here on, how do you expect the June series to kick off? Because May series has been good. Do you expect the June series to as well outperform going forward?
Yeah, so when you look at the entire May series, it has been largely showing some listless action, right? So it has completely been listless, and everyone were looking forward to the action, but then it did not emerge. So it was a great series for the option writers because the entire month was spent in a range. It has never been like this for a while. Now, the interesting thing which has developed in the May series. Okay, the last 13 days have been completely flat, and the base, right? Earlier, the range was between 24,000 to 24,500. Then the base shifted towards 24,500 to the 25,000. So that has been the upper. The Nifty has spent time in the upper end of the range, and every dip has been a buying opportunity. So once you take a look at those set of data, you see that the intention is towards the positive side. But then one should also understand that the rollover has been quite high, and almost 78,000 crores worth of FI short position have been rolled over. So when you are looking at that kind of data, so the start of June series is definitely begin on a very somber note, and we are expecting that yes, the positive cues which are emerging from the Q4 numbers will help us sustain this bullish momentum. But then we got to realize that this trigger itself is not enough. Yesterday we had the US court stepping in to create more confusion in the Trump tariff scenario. Now, yesterday we had a positive news. Today we have a semi negative news. So all this is creating confusion. So right now, more than the domestic trends, we are dictated by the global cues, geopolitical factors. So that will continue to play out until we decode the Q4 numbers, and then we say, okay, enough of geopolitical. Let's get on with the domestic front, and we'll see some upward traction. So, upward traction right now, as I always track the Nifty spot, is at 25,200. So, till Nifty spot crosses 25,200, I will not be a very aggressive bullish bias. Stock specific action continues to remain, and one should definitely be participating only on the long side. Look at dips to buy. If you want to go short, wait for 24,500 to break. Otherwise, every correction in this current market scenario is a buying opportunity. And Bank Nifty, when you talk about Bank Nifty has spent considerable range. And if Bank Nifty moves out, the upward traction will continue to remain 56,000. And if 56,000, if you get a closing above 56,000, then I'm saying that the Bank Nifty will take the lead in June series.
Okay, Bank Nifty could take the lead in the June series. Buying on dip should be the strategy going forward. But with just about 1 minute to go for the markets to open, I want to get in your stock recommendations for our viewers first.
Yeah, so when you look at the stock recommendation, I would like to go in with a long in Geo Finance because I find that the stock has played out considerably well, and I think that Geo Finance could be a good buy at the current levels with a stop at 285 for a target towards 298 and 305. And the other stock which I would like to recommend is Paytm, because I find that the Paytm is a very interesting stock market stock scenario, and the continuous positive sentiment which is emerging here could be a good play opportunity for a target towards 1050.
Okay, those were the recommendations coming in from Raja with just about a few seconds to go for the markets to open. In the pre-open, of course, we are extremely flat. Here we go, the market opening, and in the first ticks have started coming in. The Nifty is up just about 9 odd points. It is a flattish start, but we are struggling to really stay afloat. Now we're down somewhere around 20 points or thereabouts. The Sensex as well down somewhere around 70 to 80 points. But the mid cap index is holding out and pretty strongly, 0.3% kind of an up move when it comes to the Nifty mid cap index. Breadth, of course, as of now, it's firmly in favor of gainers. 1100 stocks advancing to 450 stocks declining. So it looks pretty strong at the start, but let's see how things really pan out. Bank Nifty trading with a positive bias, 55,600 is where it's at. It's trying to build on the initial uptick, but let's see how things really pan out here as well. In terms of other sectors, most of the sectors were in the green yesterday, of course, led by the global facing ones, the likes of IT, metals. Let's see what they are doing, given the fact that there is some semi-negative news when it comes to tariffs. So yes, IT pack is down 0.6% as we speak. It is the top sectoral laggard. Talk about metals, they are managing to hold out in the green, but marginally so, just about 0.2% kind of an uptick when it comes to the metal stocks, metal sector rather. Let's talk about some of the other pockets then. PSU banks today seeing some buying. We have realty trading with the negative buyers. Oil and gas just about 0.2% kind of gains. It is a fairly mixed picture when it comes to sectors, but IT is taking the lead on the downside, down almost 0.7%. In terms of the stock movers on the index, let's see which are the stocks that are on the gaining side today. Coal India, Adani Ports, Apollo Hospital, ONGC, Grasim, Eternal, Geo Financial, JSW Steel, Sun Pharma, Maruti Suzuki, these are some of the gainers. SBI Life also gaining today, and so is Cipla. What's not doing well? Bajaj Auto, despite a smooth set of numbers, the stock is down 2%. It is the top Nifty laggard. Export growth has been strong, but let's see what's really weighing in on the stock. We'll take stock of what the brokerage is also saying on this particular counter, but for now the stock is down 2%. Infosys, Tech Mahindra, HCL Tech, these three are among the top Nifty laggards. IndusInd Bank, Bajaj Finance, Dr. Reddy's, Bharti Airtel are some of the other laggards. But Bajaj Auto, Raja, what are your thoughts here? The auto index, so to say, has seen a very good up move from April lows, right? The auto index itself is up somewhere around 18-20%. But this two-wheeler and four-wheeler divide, which side are you tilting? And if you talk about the likes of Hero Moto, Bajaj Auto and TVS, which one would your pick or bet be?
So when I take a look at the entire auto segment, the auto segment has been in a spot of bother ever since the Trump tariff came out, and they have never really been able to conjure up enough momentum. And when you divide the auto pack into the two-wheeler and four-wheeler, the four-wheeler somehow has been able to generate some positive momentum here, but then the two-wheelers are the one. The four-wheelers are faring better than the two-wheelers, so I will go with the four-wheeler segment because they are showing much more better traction here. And from the four-wheeler, I would definitely like to go with Tata Motors because I find that Tata Motors has shown more strength here and they have been able to hold on. And I feel that over the coming trading sessions, Tata Motors will revive from the current levels of around 730 levels. And you can see a target towards 800 by the end of this series. So it's a good bet to play on. So I would go with Tata Motors as a play and not with Bajaj Auto.
Okay. Tata Motors, that's looking attractive within the auto pack from the four-wheeler pack, of course, and Raja prefers four-wheelers when it comes to the auto pack. But in terms of what the brokerages are saying, quickly just want to take our viewers through it. Jefferies has a hold rating on Bajaj Auto, target price at 8,000. It is positive on the growth outlook for both domestic and export two-wheelers, and it likes the company's rising EV franchisee. CLSA has also come out with a report. They have an outperform call. Target price is in excess of 10,100 rupees. In fact, it's at 10,149 rupees per share. And they are pointing out that the company is building in 7% volume growth in domestic two-wheelers and 12% export growth in FY26. That's about Bajaj Auto. But what about Ola Electric? If you've been really following these charts, the losses have widened on a year-on-year basis. Revenues are down 60%, and even the EBITDA loss is almost double of what it saw in the same quarter last year. Any thoughts on Ola Electric?
Yeah, Ola Electric, we have covered earlier in our sessions as well. The stock has never really been able to, sustain the momentum. Barring its debut, the stock has not been able to drive any kind of positive momentum here. And after breaking its listing low, the stock is only headed downward. So when any stock breaks its listing low, I generally term it as a very important trigger, and I would wait for the dust to settle down, because right now there is still a lot of negativity here, and I feel a lot of exits are happening at the moment. So this is not buy on dip scenario at all. So one should not be looking at considering the price and thinking that it is cheap valuation and get into the stock right now, because overall there are a lot of good opportunities out there, so one should actually go in for that.
Okay, that's the view then on an Ola Electric. But let's talk about SJVN as well. The stock has not done well. It has seen a fair bit of correction on the long term chart, 6 months YTD. You've seen negative returns, but over the last 1 month or so, it has been trying to attempt a pullback. But once again, last 5 sessions, today as well, it is reacting to numbers not all that great. Net loss. In fact, it has swung to a loss in this quarter, reported a loss of 127 crore rupees vis-a-vis a profit of 61 crore rupees in the same quarter last year. Revenues, although are up 4.5%, margins have also come in lower at 47.7% vis-a-vis 49.6%. How are you looking at this chart? It's sub 100 levels right now, and any recovery that has been trying to attempt has not really yielded any result. How would you look at this
Yeah.
chart now?
So SJVN has been showing some very sharp upside. The stock has been a multi-bagger over the last few months. So when the market underwent some bit of profit booking and sell-off, so the prices also dipped down. But then the correction has not been very sharp, and the recovery right now, which we are seeing in the markets, is coinciding with the recovery which is seeing in the prices as well. The overall, the higher time frame charts clearly suggest that this could be a good time to enter into SJVN, because the overall there is a good patronage of this stock. So this could be a good price point to enter with a stop at 85 for a investment opportunity closer towards the 130 region by the end of this year.
Okay, the stock has seen good traction in the last 3 months for sure. But let's talk about the defense pack as well. BDL numbers disappointed, and now Mazgaon Docks numbers have come out, and not really managed to impress, because profits are down 50%, revenue is up in single digit, low single digit 2%, EBITDA is down 82%, and margins have really shrunk. They've come in at 2.8% vis-a-vis 16.8% in the same quarter last year. The higher expenses that have dented profits and margins, although the company has surpassed its FY25 guidance both on the revenue and margin front. How are you looking at these defense names, because they did see renewed traction after Operation Sindoor? Would you utilize this dip as a buying opportunity?
Yeah, definitely. When you take the likes of Mazgaon Dog, GRSC, BEL, they are in a space which is receiving continued patronage, and the defense space, which was one of the key sectors which was promoted by the government. It was not as much, it did not receive that much. Yes, there were a lot of participation, but the glamour or the attention which it got after the Operation Sindoor has been quite significant. And that's what has resulted in many of these names, even HAL, going up steadily on a day by day basis. So every dip in such names would be a buying opportunity. And yes, there are going to be news flows, but then these news flows would be absorbed quickly because the overall, the broader theme is on the positive side. So it will be considered as a good opportunity to get into the stock. So yes, higher time frames are positive. The dip today would be a buying opportunity.
Okay, the dip today is a buying opportunity. In fact, I can spot a query on Mazgaon Doc from Varsha Gajar. Varsha, hope this answers your query. But let's shift focus to a Suzlon. The stock has been on a tear, and today as well, it's reacting to its numbers. It's up almost 12% in the last 1 month. The stock has gained 30%. It's slowly inching towards its 52-week high of 86 rupees. We have a couple of queries on the counter as well on our feed. Just want to spot the names. Nitin Shahji has a query on Suzlon, and we have another query which I've kind of lost. But talking about the stock, inching towards 86, does it have more room? Has been a breakout stock, so to say. Tell us what you feel.
Yeah, so stocks like Suzlon, Vodafone Idea, R-Power, they are a paradise for people who want to buy, stocks at a cheap level. But yes, one's got to understand that majority of these stocks they don't move for years. So if you're going to invest into a stock like Suzlon, one should also marry your patience level. If you are not going to be patient enough for say the next 3 years, then stocks like Suzlon should not be in your portfolio. So if you're just going to buy Suzlon for some return, you also got to see in how much time are you expecting that return. Otherwise, then Suzlon, yes, chartically many of the stocks look good, but then what it demands is how much of patience you have to hold on to the stock. If you have a patience for 3 years, then Suzlon can definitely double from here. But then, are you willing to wait so long? Overall consolidation over the last 6 months and a breakout today is definitely a very good sign. Any dip towards 66 would again be a buying opportunity, and this stock could move towards 90 within the next 6 months.
Okay, the stock could move towards 90. That's the call on Suzlon. But let's shift focus to a query on Canara Bank then, coming in from Naveen. Wants to know if it's a good candidate for a positional play. The stock has seen a good 13% uptick in the last 1 month. Would you look at this particular bank within the banking pack?
See, I would like to, like I mentioned at the start of our session, that 56,000 is a very important zone which I'm tracking in Bank Nifty. And unless that is really crossed, I don't see the bank stocks really firing up. So at the moment, it will be a wait and watch. And the overall trajectory in Canara Bank has been quite good. And over the last 2 months, the stock has really pumped up enough momentum. And yes, it's one of the top and active banking stocks on the PSU segment. So I would put as SBI, Can Bank, and Bank of Baroda as the three names which I always like to participate if it is in the PSU space.
Okay, that's the call on Canara Bank. Hope that answers your query. The next one's coming in from Alex. Wants to know your thoughts on Triveni turbines, whether or not it's good for a fresh entry. The stock has done well in the last 1 month. In the last 5 days, although it has been a little quiet, still, some time away from 52-week highs. Would you advise a fresh entry now, keeping target of somewhere around 650 or 660 in the near term?
Yeah, the stock has given a minimum correction here, and the higher time frame charts clearly says that the stock has been on a very steady rise, and the sector which it is in has been actively promoted by the government. So we are seeing a lot of action in the capital goods space. So this stock could be a very good stock to consider because after the recent correction, the stock has stabilized, and it could be a good point to enter for the targets you mentioned.
Okay, that's the view on Triveni turbine. Hope that answers your query. There are 3-4 queries on these new age stocks as well. Swiggy and Zomato. First of all, Rupak Mehta wants to know, is it a good time to invest in either of these stocks? And we have a couple of people who have some holdings as well. Siddharth has Swiggy shares at an average of 305 rupees. He wants to know what he should do. And Priya as well has Zomato shares for 265 rupees, and she wants to know how long should she hold. So these two stocks, Swiggy and Zomato, how should one approach?
Yeah, so when we are looking at Swiggy, again, it has broken the listing low. So it is definitely off my radar for now because any stock that breaks the listing low. So this is a generic but a very important trigger which I follow. Like I mentioned at the start for Ola. So this is also done the same, and that is why it is not able to generate that kind of revival momentum here. And right now also the stocks are still struggling. And on higher time frame charts, I feel that the stock will take some time. Yes, the QSR segment is definitely witnessing a lot of interest, and considering the current environment, so the attraction is very much there, but then the intention is not seen yet. Unlike Swiggy, so Swiggy, if one were to exit, okay, let's come to the point of exit. So if it were to now, if you're holding right now, any rally towards 390 would be a good opportunity to track and exit on the upside. If it's not going to cross even the 390 to 400 levels within the next few months, then one should be very careful. And on the lower side, a break below 300 definitely calls for a complete exit. Now, talking about Eternal, Eternal is quite strong, and compared to Swiggy, Eternal is a much better performer. It has also got the inclusion into Nifty, and all the continuous tailwinds which are emerging in Eternal are encouraging facts, and this could help Eternal move towards the region of around 450 by the end of this year. Overall, it's a positive scenario. The stock has managed to survive the recent chaos, and stock is holding well. And I think that even the recent numbers were muted, but then yes, it was accepted by the street, and I think that the stock could continue further higher. So it's a good stock to have in your portfolio.
Okay, that's the view on the overall QSR, quick commerce space, I beg your pardon. Hope that answers your query. One query from Satya CK then on Inox Wind wants to know the next major resistance and support levels for the medium term. The stock has kind of taken off, if you see from 9th May, and since then it is up somewhere around 25%. So what are the resistance level you will be watching up, you will be playing with here?
Yeah, so Inox Wind, especially after its inclusion in the future segment, has seen definitely some good tailwinds, so to say. So the positive traction which is emerging here, and also the space which it is in, and the continuous patronage which we are receiving for the energy space is going to ensure that the stock momentum is not going to die down. The brief decline which we saw was largely due to the profit booking. But now, once again, we are seeing a resumption in the positive trend. So overall, the trend looks positive. Yes, one should look to invest into the stock or trade into the stock. The upward trajectory looks towards the region of around 250 at the end of this series.
Okay, that's the view on Inox Wind. Hope that answers your query. But just some bit of news flow then. I want to get in your thoughts on these gold loan companies like Manappuram and Muthoot, because there's been a post on X social media from Finance Ministry where they've said that draft directions on lending against gold collateral issued by RBI is being examined by the Department of Financial Services, and the department has suggested the requirements of small gold loan borrowers should not be adversely impacted. In fact, they've said that it will be suitable for implementation only from 1st January 2026. Small ticket borrowers below 2 lakh rupees should be excluded from the proposed directions, and RBI is reviewing the feedback that they have received on the draft guidelines from the Department of Financial Services. Just want to see what these stocks are doing right now, Muthoot and Manappuram. Your thoughts on how you would play this, because Muthoot has shot up. It's at the day's high almost 2% uptick, and just want to see what Manappuram is also doing. That stock is also off the days, significantly off the opening lows. Your thoughts on the levels to watch, what to do?
Yeah, so more than apart from these regulations, they are also closely linked to the gold prices scenario. And when you take a look at the price of the gold, which is showing some steady up move over the last few days, I feel that they are responding more in line to the gold prices. And the Muthoot and Manappuram over the last few trading sessions have been largely sideways. But then when you consider the space, like the finance sector has been able to buck the trend, and they have been able to sustain and show some positive traction in the last series. So I feel that going forward, this could be a good point to enter into Manappuram and Muthoot. But then between Manappuram and Muthoot, I will prefer a Muthoot because a Muthoot is a much faster mover. And I feel that if one needs to participate in this gold finance space, Muthoot Finance will be the one. I would look at a target of around 20 to 50 within the next 1 week to 10 days as a trading bet. So it's largely from a trading perspective because they are largely commodity driven, commodity linkage is there. So I would prefer this as a trading bet rather than an investing bet.
Okay, consider these gold loan companies as a trading bet rather than an investing bet. That's the call from Raja. But Raja, last query then from Hemant wants to know your thoughts on Fortis and whether it's showing signs of an upside breakout. Wants to know if you would recommend a buy position at current levels. I was just going through the chart of Fortis. From January end to now, the stock is up 22%. Do you think it is a sustained breakout, and is it good to buy now?
Yeah, Fortis has definitely been slowly inching higher, but then one needs to consider that the market right now is not favoring a breakout rather than a dip buy approach. So, if you are looking at Fortis and if you would like to invest, the levels would be a little bit lower, closer to the region of around 680 to 650. Though, if it enters into that region, that would be a good area to buy into rather than buying at current levels because the market still is not in extremely bullish mode. So, taking a chance on a breakout would be a risky one. Now, coming to the pharma space is definitely showing a revival after the Trump tariff showed that the pharma is not going to be as affected as it was expected. And this is helping the pharma stocks as well. And certain stocks are definitely showing some positive traction here. And I would say that Fortis definitely has been showing some strong movement, and it would definitely be a good stock to add to your portfolio.
Okay, it will be a good stock to add to your portfolio. Hope that answers your query. But just a couple of more queries that I want to get addressed. Vaibhav Kumar wants to know your thoughts on IRCTC. It handed in its fourth quarter report card recently. It was pretty okay. Is railways as a pocket looking good once again?
Yeah, railway as a pocket, I feel as got had its heydays around 2 years ago. Right now, what is happening is that they are only getting some news flows, and then the news flows only ahead of the budget, and then after that, the stocks are going into a slumber. So the kind of the market has the entire market regime has changed. There are a lot of other sectors that are developing. So one should not be holding on to any particular sector because they were doing well. The sectors will definitely show some traction, and that's how you got to keep on changing your approach, and that's how you will be able to make money. Because holding on to a railway sector because it did well earlier is not the approach to take.
Hmm. Okay, that's the view on railways, but MMTC is one stock I want to get in your thoughts on. Yesterday, I think it was up significantly by 17-18%. Today as well, another 8%. How you looking at the charts of MMTC right now?
Yeah, so MMTC had been undergoing some strong consolidation, and after the rise which we saw last year, the prices underwent significant correction, and then the correction came down to some strong set of supports. And right now the stock is witnessing some strong upward traction here. So I feel that the momentum continues over the last 3 days. The momentum has been quite strong. So entering at this level would also give a disclaimer here of risk, where the suitable risk is only, or your stop loss would only be at around the 70 level. So it's not a comfortable level right now. So I would wait for a pullback closer to the region of around 70 to buy into.
Okay, that's view MMTC. But last query then. This time around, it is the last one. Godfrey Phillips. We have a query on this stock from Debu K. Wants to know your thoughts on how the stock is poised with a 3-month time horizon. What would you say?
Yeah, if you see the last 3 months, the stock has nearly doubled. Okay, nearly doubled. Now, if you are expecting for the next 3 months the stock will double from here, the answer is definitely no. The stock has is reaching a point of exhaustion. What do I mean by point of exhaustion is that there should be some profit booking here. So this is a very good stock. You should definitely track it, but then you got to be aware of the price point, and you should also be aware that you can only buy X number of shares considering its value. So it's a level which I would be comfortable getting into is around 7,000. So I would wait for a dip towards the 7,000 mark, and then I would consider getting into the stock. Overall, the stock is at its all-time high, and I believe that this stock could also double from here if the bullishness in the market steps into. Because as far as the space is concerned, the cigarette space is concerned, Godfrey Phillips is a much better performer than ITC, because ITC is a diversified company and Godfrey Phillips is a much focused one.
All right, that's the view. Buy on dip, wait for the 7,000 mark on Godfrey Phillips. Hope that answers your query. But with that, we've come to the end of the query segment. Raja, I would like to thank you for taking out time and joining in and sharing your thoughts. Look forward to our next conversation next week. Have a great
Thank
weekend
you.
till then.
Yes. Thank you, and enjoy your
Thank
RCB
you.
event.
On that
Thank
note,
you.
thank you. We'll be watching out for Tuesday's match, the finals. Well, on that note, markets are extremely flat, just about 20 points down on the index, pretty sideways. The mid-cap index, although, is showing some bit of strength, and the advanced decline ratio is even Stevens, but now it's tilted more in favor of declines. But let's bring on board our next guest then on that note and talk about factor investing as well and how it helps you navigate volatility in the market. Joining me is Karan Aggarwal, co-founder and CIO at Elever. Karan, lovely to have you on the show. We're talking to each other for the first time. Want to get in your thoughts on how you are, reading into the current market moves, in the recent market moves, so to say. They have been fairly choppy. Nifty has been moving in a tight range, but we've seen a 12 to 13% recovery on the index from April lows, and domestic flows have also been steady, but fund managers have increased their cash levels. So what's the sense you're getting here on? Do you think money will start getting deployed on dips now?
See, thing is, we see very limited upside here from these levels. Okay, if you look at risk return trade-off, it's quite, I would say, it's unfavorable towards any sharp upside movement. Okay. In general, if you look at the recovery was coming at the time when PE was around 19 in the range of 19x to 20x. It was a historical discount. Basically, it was a discount of 15-20% to historical averages, 5-year historical averages and 10-year historical averages of 22x to 23x. Right now, it's sitting at around 22.5x. So there is no valuation gap that is there. If you look at the EPS numbers, basically EPS growth has moderated from around 20 to 25% in FY24 to around 8 to 10% in FY25. And last quarter also has not given much comfort. We still don't have any proof regarding EPS rebound. Okay, that will take markets to higher valuations. Okay. If you look at the credit growth number, credit growth has also moderated in last 1 year from 20% to 10%. Capex, government capex has also come down. Even the last capex that were declared in FY24 targets were not met. Okay, so overall, we are looking at we believe that we are looking at a structural slowdown right now, and it might continue for next 2-3 quarters. Okay, so there might be some liquidity. If you look at the cash flows, FIIs, if you look at the last 5 years, they have been net sellers, and they have always entered the market whenever there is a valuation comfort. Okay, in last 15 years, in general, US markets have delivered in dollar terms much more superior returns than Indian market. But whenever there is a valuation comfort, they've entered. So valuation comfort is already over. Okay, in last 5 weeks, the rally that we have seen since 7th April. Okay, the valuation comfort has already gone. Okay, most of the and without an EPS, a cushion of EPS rebound or credit growth or any signal. Okay, that the structural economics coming out of this structural slowdown. Okay, you cannot expect DI to deploy big money. Okay, so everybody is in a wait and watch mode, and mostly people are looking for dips to deploy money. Okay, at this point, considering global headwinds, we see two big, negative events that can take place. They might not take place, but there's a sufficient downside risk. So one is tariff that is supposed to play out in July, and second is US debt rollover. Okay, that is supposed to take place in October. US is looking at around 11 trillion of rollover. Okay, debt rollover. If normal economics, if we go by normal economics and normal market conditions, US 10-year yield can go up to 7 to 8%. Okay, unless something out of ordinary happen. Okay, so in case of 7 to 8% yield, we can see a sharp correction in US market, and Indian market can also follow. Okay, so these two risk events are there that can take market down by around 10 to 20%. Okay, and right now we see more downside risk, basically of 10% downside risk is there. We see more downside risk than upside potential as of now.
But that would take some time, right? I mean, you would have like a 1 to 2 year, outline for that. I mean, it's at sub 5% now, the US 10-year yields.
Actually, I missed the
Okay, then on
question.
that note,
Can you
let's talk about. Sure.
Can you go again, please?
You're saying the US yields could go higher, in fact, go up to 7 to 8%. I mean, how much time do you think that will take? It'll take for the US yields to hit that level?
See, in October, US is going for a debt rollover. Okay, they're going for debt rollover of around, you can say it's around 7 to 8 trillion of debt rollover plus 2.5 trillion of fiscal deficit financing. Okay, that's nearly, you can say around 25 to 30% of their overall debt stock. That's around 36 trillion. This level of debt selling, if this is going to come to market, it's going to crowd out entire private and government markets. Okay, it is going to create a liquidity crunch. Okay, in general, and yields right now they are already trading at around 4.5 to 5%. They're already at higher levels. Okay, we have seen some some buying in bond market in last 4 days because yields were at 4.6 and it attracted some investors. Okay, at those levels, but that level of financing, if we go by normal market conditions, normal market rules, okay, and general economics, yields are going to go up to 7 to 8% by October. Okay, this scenario, I'm not saying this would exactly play out as it is. Okay, in past we saw similar scenario. Nearest that I can see was in 2011. Okay, US and Eurozone both were facing sovereign debt crisis that time. Okay, and so yields actually went up from 0.5% to 2% just within 4 weeks. Okay, I'm talking about August 2011. Okay, and that time to support the yields and to support the government financing, Fed decided on a bond buying program. Okay, they basically started with 500 billion a month, and then they made it unlimited as it is needed. Everybody thought that it would not work. Okay. In general, we have been told as a I'm saying again, by basic market wisdom, it's considered that if you are printing money and throwing it into the market, it will create massive inflation, hyperinflation, and it will damage the economy. But US being US, taking advantage of reserve currency status, they managed to came out of it. They were going through deflation at during those days. Okay, inflation, it took them 4 years, despite putting so much money into the market. Okay, and in the economy, it took them 4 years to create inflation of 2%. Okay, and that time eurozone was going through crisis, so a lot of money was moving as a safe haven. Okay, a lot of money was moving from you already. The journey started in 2010. Money was moving from euro to USD. So we actually saw USD strengthening. Okay, despite debasement of the currency. Okay, so US exceptionalism has been there. Okay,
Right.
for last 14 years. Nobody thought that they would survive it beyond 2015, 16, at least in 2011. 2, 3 years down the line, opinions changed, and we saw a new bull market in US, and bond market continued for next 10 years. Okay, so we are again at crossroads, and we have to see how it will really play out in the market. But I'm saying it's not possible without, if you go by normal market dynamics, there is no way US can refinance it without taking yields, 10-year yields to 7 to 8%.
All right, but yeah, 7 to 8%, that will not be good news for the market. But let's also talk about factor-based investing then. How does it really help in making smarter decisions, especially in volatile times, and how do they really help reduce risk for retail investors?
See, basically, if you look at the market options that we have these days, okay, markets have changed a lot in last 20 years, okay, and there were times when people have to take exposure to stock market. They have to either dabble in the stocks directly, or they have to go to mutual funds. So, and at every in both of the options that we used to have 20 years back, there used to be a security selection risk. Okay, there's a chance that you might underperform the market by a good distance. Okay, so we have index funds these days. Index funds are available at 5, 10 basis points and very easy to get market returns. Okay, and the most of the people who are looking beyond index funds. Okay, whether they are stocks, mutual funds, PMS, AIFs, anything they are looking for alpha. Okay, there's no other reason to go beyond index funds as of today when we are speaking. Okay, so factors basically. If you look at there's already an NSE already has a product suite built on factors, and it's publicly available. Data is publicly available. If you look at the backtest data that has been tested to 2005, and so if you see, most of the factors have outperformed the benchmark. Okay, this is a rule. This is a rule-based approach. Okay, and most of factors have outperformed the benchmark. Volatility, low vol has outperformed the benchmark by around 3%. Okay, on an annualized basis. If you look at momentum, go to high risk, because we have been in a upward trending market in India in last 20 years. Momentum has outperformed by around 5 to 6%. The thing is that if you look at low vol strategy, okay, in the low vol strategy, risk is lower than the benchmark. Okay, if so it's a generally people say that you have to get high returns, take the high risk, and that's how the markets work. All the investment, the risk return profile works. But here in the low volatility segment, if you go, you get alpha at lower risk. Okay, and if you go to momentum side, you get the basically follow the high risk high return thing. Okay, so even for a low risk investor who do not want to take the market risk, or who want to reduce the market risk, okay, they want to add equity exposure to their portfolio, okay, while minimizing the drawdown during the extreme bearish phases, they can also add alpha to their portfolio. Okay, so different for every risk profile, whether it's low risk, for low risk there's a dividend. Okay, dividend is there. Low vol is there, quality is there. For moderate risk, value and aggressive quality is there. If you go to high risk spectrum, there's momentum and alpha is there. So according to your risk profile and risk taking capacity, you can capture market alpha. That's how basically factor investing helps.
So the market, do you see having the strongest alpha potential today?
Come again, please.
Which pockets of the market do you see having the strongest alpha potential today?
See, as of now, for 6 months, we see markets going sideways for next 6 months. Okay, there might be some movement towards 26,000. Okay, from July onwards, some touch and go that would be there, but again there would be a correction till October. Uh, as of now, we see if you look at the our market view, okay, we would be sticking to large cap defensive sectors like FMCG, utilities, and pharma. FMCG has underperformed the benchmark for last 3 years on 1 year basis, okay, on a rolling basis. And we looking at the monsoon, the monsoon trends and the low inflation, low inflation numbers. Inflation is in year six year low. Okay, we see we see the volume. We can see a revival in the volume growth. Okay, and this sector, FMCG sector specifically, would act as a safe haven in these turbulent times.
All right, FMCG, that's the sector that's preferred by Karan. With that, Karan, I would like to thank you because we're running out of time for taking out time and joining in this morning. It was a pleasure chatting with you, and I look forward to our next interaction as well. Thanks a lot for joining in.
Yeah, thanks a lot.
Thank you. Well, on that note, of course, extremely flat when it comes to the market, just about 20 points down, but the Nifty is holding on to that 24,800 mark. But the Nifty Bank Index has slipped into the red as we speak. But with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates. I'll see you at 3:30 p.m. with Closing Bell. Have a good day.